But let's focus in as to what the outlook is when it comes to the NPA woes and whether or not the second wave is just going to add to the pressures. MSMEs, are they likely to bear the brunt? And what is the outlook on realty finance as well as delinquencies? We've got Rajesh Sharma, the Managing Director of Capri Global Capital, as well as Krishnan Sitaraman, the Senior Director at CRISIL Ratings, joining in on the show. Mr. Sitaraman, thank you so much for taking time out. I'll begin with you actually and talk about this second wave, which is intensifying, and a challenge definitely lies in the unsecured loan segment, with the unsecured lending at about 4% of the industry. What is the total quantum of industry loans to unsecured books, and is the underlying stress increasing, or has it increased significantly?
Good morning, everyone. Thanks for having me on the show. I think you're very right that the second wave will bring forth with it challenges on the asset quality front. And this is something which we were indicating a few months back as well, that at that time, the collection efficiencies were improving from August, September onwards on a month-on-month basis across asset classes. But if there was a rise in the intensity of cases accompanied by containment measures, restrictions, that would have an impact on collections. But I still think that as compared to what we saw a year back, the restrictions announced so far are lower in trajectory or intensity as compared to a year back. So while there will be an impact on collections and delinquencies, my sense is with what I have seen so far, the impact should be lower than what we saw in Q1 of last year. That said, what I am looking at is an increase in delinquencies across asset classes. If I look at NBFC specifically, I feel the sectors like gold loans and home loans will be least impacted, whereas unsecured loans, MSME loans, and wholesale loans, they will be more impacted given the vulnerability of the underlying borrower class. You specifically asked about unsecured loans. Our sense is the stressed assets in that space is in the region of around 9 to 10%, and that includes some element of restructured assets. We will have to see how long the spread, intensity, and duration of the pandemic and the accompanying lockdown measures last. And if they come over with the increasing vaccination trajectory, if we get a control over that in the next, say, couple of months, I don't see much of an increase beyond that. But if this lasts for, say, 6 months, 7 months, then we could see a further upside. And in the unsecured side, this is the most stressful scenario that we are seeing in the last, say, 10, 12 years. Last, when we saw the highest stress building up was in the wake of the global financial crisis, when we saw subprime loans, we saw credit card receivables rack up NPAs in the region of 10 to 12%. Subsequent to that, we have seen unsecured loans perform reasonably well. And now with the pandemic and the accompanying containment measures, we are seeing delinquencies move up.
Right. Mr. Sharma, let's talk about MSMEs because they were the most impacted in the first wave. Help us understand what the situation is like now with the second wave being far more fierce.
So I think it is going to impact in two ways. Collection is going to be impacted because there is a lockdown in various cities. There is a growing fear among the people, and social distancing rules are being followed a little more strictly than before. I feel that collection will get impacted. Delinquency might rise in MSME unsecured more, and secured portfolio still it will be on lower side. But looking at now, it spread across all the even smaller town this time, and there's a pressure on hospitalization. All in amid this growing fear, I think lending companies and especially NBFC will also be more careful in the growing their retail book till this stabilize in next 1 or 2 months, though we do not know how long it will go. So I think it is going to impact the growth and it is going to impact the collection efficiency. Hence, there'll be a slight increase in the delinquency in the Q1, depending on how long it will go.
Sure. Okay. Mr. Krishnan, if I could, just carry forward the discussion with you, what really you think is the future outlook of NPAs going forward for unsecured loans and the quantum of NPAs and provisions that may be needed at the industry level with this, second spike in cases that we're seeing?
Sure. So as I said, we are seeing stressed assets in the unsecured book in the region of 9.5% to 10%, and it will vary from company to company. And certain entities it is lower, certain entities is higher. And as Rajesh was also saying, that a number of NBFCs have enhanced or improved their credit appraisal and underwriting processes. And that has also enabled them to have a control over how, to the extent of which the NPAs are moving up. There has been an increasing element of digitization and technology enablement in the business processes as well. That is also helping to some extent. But coming back, as I said, if the spread intensity and duration of the pandemic and the containment measures extends or prolongs, we could see delinquencies go up beyond the 9.5% to 10% that I talked about. And here what we will have to see is the underlying borrower profile. That is very important. So if we look at both the salaried and the self-employed, these are the key segments of the underlying customer profile. We are seeing a bulk of the customer segments all getting impacted because of the underlying situation. However, there is a small sliver in each of these which have not been impacted that much. So for instance, if you look at IT professionals, a large segment of them within salaried class, their salary levels and jobs have not been impacted. And if you look at their discretionary expenditure, that has come down. So they're not going to five-star hotels, they're not going on vacations, they're not going to multiplexes. So they are having a larger quantum of savings with them. So that customer profile is not impacted that much, but a bulk of the salaried segments are facing salary cuts and job losses. They are impacted. On the self-employed side, again, if you are in the essential segment like agrochemicals, pharmaceuticals, there again the impact has not been much. But for the bulk of the other segments, we are seeing vulnerabilities in business cash flows. So what this will result in is an impact on collection efficiencies and delinquencies as far as NBFCs go. And in unsecured loans, the recovery levels or retrieval, once the default goes into a large delinquency bucket, that is not very high. So if you look at, say, a 10% stressed assets or NPAs, a bulk of that will need to get written off. Whereas if you look at a home loan or a gold loan, the element of recoveries will be very high there. So in unsecured loans, once there is a delinquency, recovery levels will be low. So the provisioning level that you will need to take is pretty much a large proportion of what actually turns delinquent. So that's something we will need to continue to monitor. But the key, I would think, is how long the situation will prolong.
That's a very interesting perspective that you just gave us. Also wanted to understand that amidst this classification, now that, banks, NBFCs, MFIs, they're all into unsecured loans or rather lending, which category do you see most hit? Or is that not a fair classification, you think?
I would say it is dependent on the underlying borrower behavior and borrower profile rather than specific segments within unsecured itself. So for instance, if I look at, say, I won't like to take names, but if there is a very high quality, say, private sector bank, and they are choosing their customer profile very, very selectively. And if you go back to my earlier response, they are looking at salaried professionals and self-employed guys who are not much hit. So then whichever segment they are in, their asset quality will not get much impacted. But as you move down the spectrum of either private sector banks or even public sector banks or NBFCs, their typical customer profile on the unsecured side will not be the blue chip clients. So in that situation, their income profile will get impacted and there will be delinquencies. And if I look at the asset segments, I think if I look at unsecured as an asset class, in terms of the repayment priority for the borrower, that will come lower in the hierarchy of loans that he has. So for instance, if he has taken a home loan, a car loan, and an unsecured loan, so he will actually pay off the home loan first, then the car loan, and then the unsecured loan. So because the unsecured loan is lower in the hierarchy of repayment for his loans, they will be more impacted. So I do see unsecured loans, regardless of asset classes, the delinquencies going up. There may be minor variations in asset classes, but I wouldn't say there will be any material variations.
Okay, fair point. That's the word coming in on the classification right now. Rajesh, if I could, probe a little bit more on what, the point that you were earlier making. Tell us about how the customer behavior, especially for the MSME segment, is currently panning out. And, like Krishnan was mentioning, are there also you seeing income levels get hit most? Do you see layoffs in MSMEs? And would you say that as a space is most hard hit?
So it can't be generalized. It will depend on the what kind of a business they are into. If MSME is connected with the essential services and grocery store, kirana store type, which are allowed throughout the lockdown, even their business is normal, is otherwise. So connected MSME to this kind of businesses are doing quite normal. They are not impacted much. However, MSME connected, which are discretionary or which are impacted by lockdown, I think they are the affected because their cash flow will dry down immediately, and depending also on the cities and where they are located. So MSME, which are in the larger city or outskirts of that, they are impacted more, but in the rural and semi-rural area, still impact is in the lower side. So it will depend on their location, the kind of business they do, and depending on their what kind of impact they have, uh, I guess their cash flow to will get impacted, and let us see how long it will go. Last time there was moratorium, there was ECLGS, and a lot of MSME customer got benefit of that to address their cash crunch. And hoping this time it will not be longer. They should be able to come out, but it will depend entirely how long and how deep it pans out.
Okay, Rajesh, Krishnan, both of you, thank you so much for taking the time out and joining in and giving us some color on how the financial space is getting hit with this fresh spike that one is seeing in cases. We're going to take a very quick break on that note with news that we've cooled off from the top of the day, still going strong by 92 points, and we're still holding on to 14,450 plus levels, but we've eased off from that 14,500 mark. The breadth though continues solid. We've got 135 F&O stocks standing to the advances.